Hello, everybody, and happy Tuesday. Excuse me, I had a little cough there that I didn't take care of. But hello, everyone. I hope everyone's having a good week. And my name is Luke Robinson, and I'm a business advisor here at Collective. And Collective is essentially your all-in-one back office solution for your self-employed operation for your small business. And essentially, you can think of us as kind of like an all-in-one solution for an S corp, a one-stop shop for a business that needs to be an S corp. So, we'd handle setting up the business, getting the S corp set up, handling your payroll, bookkeeping, and tax filing. So, when it comes to S corps, we pretty much do the whole shebang. But today, we are running a session called, or something we like to call, Tax Tuesday. And Tax Tuesday is essentially just an AMA session. It's an Ask Me Anything session surrounding taxes, best financial business practices, or just sort of questions in that realm. And and I'm here for all your burning tax questions. And I believe that we already have some that have come in because everyone's favorite topic is taxes. Everyone knows that. All right. What do you recommend a professional therapist do? Well, that's a very good question. Because a lot of therapists are self-employed. They're 1099. There are some therapists that work W-2, but most therapists that I speak to are definitely self-employed. Um, and really, I think probably one of the most important things for therapists and just licensed professionals in general is research or speak to a tax attorney. Oh, and before I kind of go on to, it's important to get the legal stuff out of the way as well. That just think of this information that I shared today as just simply information. Don't consider it tax advice. Don't consider it legal advice or anything like that. It's always a good idea to speak to a tax attorney, a tax professional, or a CPA before you kind of move forward with any of this information. But one of the things that I'd recommend for professional therapist and just for professional industries in general is research what kind of entity that you need. And what I mean by that is usually when someone starts a business, they set up an LLC. That's just kind of the typical business entity, and kind of, I guess, the template of the business structure that most people choose to set up. But there are some states that require certain professionals rather, like therapists, doctors, nurses, people like that. They will sometimes require them to form what's called a PLLC, and it stands for Professional Limited Liability Company, and it's essentially just a special entity with the state for licensed professionals. So that's really one of the most important things that I would suggest a therapist is speak to some sort of licensing attorney, speak to a professional that would know what kind of entity you need to set up for your practice. Okay. I use a fake live stream app to make content. Can I write off the subscription to the app? Yeah. Well, let me put it to you this way. If you are exclusively using this app to make content for your business, then I don't see any reason why you couldn't write that off. And a business expense, what defines a business expense is an expense that is both ordinary and necessary for your business, for your course of business. So sure, I don't see any reason why you couldn't write that off. This is a good question. I use my dog as advertising for my business. Can I write off his dog food? I would say probably no, to be honest with you, because the IRS, The IRS would probably see that as is not exclusive enough to be a business expense because the main purpose of your dog is probably just your personal pet, which is not, a deductible expense. So they probably wouldn't allow that as a write-off. In my opinion, I could be wrong, but I don't think so. I don't think they would allow that. What counts as a business deduction? What if I buy my clients vacations? Ooh, this is a really good question because, this has changed a little bit. But a business deduction, again, it's something that really a business deduction, it's the same thing as a tax deduction. It's same thing as a write-off, business expense. All of these are the same things. But again, a write-off is anything that is ordinary and necessary for your course of business. Now, client client entertainment, like client vacations, ball games, things like that, they you used to be able to deduct a certain amount of those. But ever since the 2017 tax law, they actually changed that to where you can't write off client entertainment. So I don't believe that you'd be able to write off client vacations, unfortunately. Ooh, here's a controversial question. Why do we pay taxes on everything? Well, there's different rationale for, different types of taxes. Um, like for example, property taxes. Those typically go to taxes that you literally pay on your property, like land and houses and things like that. Those typically use are used to fund our school, our school systems. And to answer the questions, why do they put taxes on everything? Then really all I can say is that's just how the government has decided to uh, I guess collect tax revenue to pay for a certain expenditure. They've just decided that it's property taxes they want to do that. So really, at the end of the day, it's just up to the government. Yeah. How do taxes work when it comes to trading? Well, it depends. And typically, when you're just kind of like an average trader, like let's say that you're buying and selling stocks or ETFs or things like that, then usually what happens is you'll buy something and you'll buy a stock and you'll own it for a while and it'll either go up and down or go up and down in value. And when you sell it, if you have a profit, then typically you'll pay capital gains taxes on that stock. So just keep that in mind. At what point can you go to jail over taxes? Ooh. So usually, hmm. Usually, like when people go to jail, it's usually for some, pretty sort of serious, willful tax fraud. That's typically when people go to jail. People don't necessarily go to jail for just simply not paying their taxes. Now, if you don't pay your taxes, you'll get a bunch of penalties and interests, and they can suspend your passport. They can, and I'm sorry, my girlfriend, quick personal aside, my girlfriend actually just bought some birds, pet birds for us, and they're squawking very loudly. So I apologize if you guys hear that. But typically, you'll only go to jail for sort of willful tax fraud. Now, if you don't pay your taxes, though, they can still really mess with you, like the things I just mentioned, and they can eventually start levying your bank accounts, garnishing your wages. So it's a really good idea to pay your taxes and to comply with tax laws, definitely. But usually, people go to jail when they're committing willful tax fraud. How is it possible that Elon Musk pays zero in taxes? Well, I'm not so sure that he pays zero in taxes. He probably pays a ton in taxes, but If there are certain years where he doesn't pay anything in taxes, it's because he has because most of Elon Musk's wealth is in stock, in assets. It's not in cash. So he's not walking around, with $100 billion in his bank account. He's walking around with, $100 billion in stock value. So essentially, what he does, like if he's not paying taxes in certain years, then he's the only way that he's gotten money is by borrowing off his assets. You can borrow off your stocks and assets. Banks will lend you money off that. And borrowing money off your assets is not taxable income because it's not income. You've got to pay that money back. So that's how he spends money without paying taxes on it. Is it smart to drive an electric vehicle because of tax loopholes? Well, I mean, that's up to you. I mean, that's really a personal decision. And it very well might be. I mean, there are some attractive, especially if you value sustainability and, decreasing your emissions and whatnot, then there are some valuable tax, or not really tax loopholes, but tax incentives for owning and buying an electric vehicle. So it could be smart if that's something that's important to you. How do you pay for things if your wealth is in cash? Hmm. Well, you just pay cash. I mean, well, what you could do is, I mean, you can technically you can do the same thing as Elon Musk. So let's say that you own a bunch of properties. Let's say that you own a bunch of rental properties or assets, stocks, bonds. You can typically borrow off those assets, and that's not taxable income. Now, of course, you got to pay it back, of course, but you can do the same thing Elon Musk does. I mean, typically it's not possible for the average person because, of course, they don't own the type of assets that Elon owns. But theoretically, it's still possible for you to borrow off your assets. Do you know what the Fair Tax Act is? I actually don't know what the Fair Tax Act is. I haven't. I know that it was passed, I believe, in 2023, and I believe it has something to do with sales tax. But unfortunately, I'm not an expert in it. I don't know much about it, unfortunately. Why do employees pay the most in taxes? It seems like the rich don't pay as much. Well, that's a really good question. And unfortunately, employees, people that are employed, do pay a lot in taxes. Both employees and the people that employ them, their employers, they pay a lot in taxes for having employees. And the reason why employees pay a lot in taxes is because of payroll taxes, essentially. And what payroll taxes are is the Social Security and Medicare tax. The Social Security and Medicare tax, it's a flat tax rate of 15.3%. This is also the self-employment tax. Like when you're self-employed, you pay the same 15.3% Social Security and Medicare tax. That's literally what the self-employment tax is. But employees, though, they pay a lot in taxes because all wages are subject to the self-employment tax. W-2 wages is subject to it. But things like investment income, dividends, capital gains income, things like that, they don't that income is not subject to the self-employment tax. So unfortunately, any income that comes from a wage is just subject to additional taxes. Is it smart to get tax advice from TikTok and Instagram? Well, to be honest with you, sometimes absolutely not, and sometimes sure. And at the end of the day, like anything else, It depends on the source. It depends on the professional that's sharing the content. It depends on the company that's sharing the content. It really does depend on the source, and it's usually a good idea to if you hear something on TikTok or some sort of social media medium, it's a good idea to verify that information with multiple sources. Verify it with an actual tax professional or other sources on social media. Um, it's a really good idea. And there's some accounts that will go out and tax attorneys and tax professionals will set up Instagram accounts that will try to go and debunk bad tax information from other sort of tax influencer accounts. So it just kind of depends on the source whether or not it's good information. How can the average Joe get into the highest tax bracket? Really, the only way to get into the highest tax bracket is to make more money. And I believe the highest tax bracket, let me do a little bit of research. The highest tax bracket is an income of, let me see here. If you're single, let's just use if you're a single person. If you're single, the highest tax bracket is 37%, and that income is 609,000. So to get to the highest tax bracket, you essentially have to make $609,000 to get there. And brackets, this is kind of how brackets work. So the income tax, we have what's called marginal tax brackets in this country. So essentially, certain chunks of your money are subject to different tax rates. So for example, from $0 to $11,600, that's subject to 10% taxes. Then from 11,000 to around 47,000, that's subject to 12% taxes, and so on and so forth. So that's how marginal tax brackets work. Is it true that Dubai has a 0% tax? Yes, I do believe that's. I mean, I believe that the UAE is a tax-free country. Now, I'm not sure. I'm not sure exactly the details of it because I'm sure that there are certain taxes, but typically no taxes levied against your personal income if you go and you work in Dubai or have investment property and rent it out for profit. Okay. What are some tax advantaged countries? Well, Dubai obviously is one of them. They don't have any taxes there typically, and Switzerland. Of course, you always hear of the Swiss bank accounts. They usually have some attractive financial implications for taxes. What should you do if you lost money investing in FTX? Well, what you should do is because essentially you you're essentially able to treat losses in cryptocurrency as sort of almost like an investment loss. So you can write off um, investment losses and you can offset capital gains and income. So essentially, you can write that stuff off. Essentially, so if you have losses in crypto, then you can write it off on your taxes. What happens if you stop paying the IRS? Ooh, that's a good question. Well, it kind of depends. Um, that on what stage you're in owing the IRS. If you're just at the beginning, then let's say that you just don't you file a tax return and you just don't pay the tax bill. then it's a while before the IRS can really do anything to you to collect that tax. They've got to send you, several notices before they have a legal right to start levying your bank accounts or garnishing your wages or everything like that. So it's quite a long time before they can start doing that. But yes, eventually, let's say that if you just, eventually just stop paying the IRS, they'll send you letters, asking you to set up a payment plan and asking you to set up your or asking you to pay your balance. They'll do that for a while. And then they'll eventually send you some letters that tell them that give you a 30-day deadline and say, hey, in 30 days, we have the right to start levying your accounts and whatnot. So so keep that in mind when you're dealing with the IRS. Does the IRS ever offer settlements for tax bills? Yes, they do actually. So the IRS, they have a program called the Offer and Compromise. And essentially what it is, it's a settlement agreement with the IRS. And the idea behind it is that, okay, I owe this tax balance. Let's say that I owe, $100,000 in taxes. There's no way that I can pay it ever. And I can prove to the IRS that I can't pay it. My income, my education level, just whatnot. I can prove that I do not have the financial means to pay this debt. So the IRS allows you to submit what's called an offer and compromise request. And it's essentially you disclose your financial information and you prove to the IRS that it would be fruitless, it would be worthless for them to come after you and try to search for money that you just simply do not have. Um, and at the end of the day, the IRS has to allow you to pay your basic living expenses. So they can't put you in a financial hardship by collecting money from you. So they're not typically allowed to put you on the street or um, take all of your money to where you can't buy food or whatnot. You have minimum allowable sort of expenses that you're allowed to spend without the IRS messing with you. So keep that in mind too. What happens if you don't file tax returns? That's another great question. So the IRS well, first of all, income is reported under your name. When you make money from a W-2 job, when you're a 1099 contractor and people are filing 1099s on you, the IRS is receiving that income information reported under your name. So they have a record of how much money you've made. They don't have a record of your write-offs, of your business deductions and things like that. So they don't know how much tax you owe, but they do know how much money you've made in a certain year, usually. And when you don't file a tax return for a while, first of all, they'll send you a lot of notices, asking you to file a tax return and all of that. But eventually, they will file what's called a substitute for return. And it's called SFRs, in the tax in the tax world. And essentially, it's a return the IRS files on your behalf, and they just use income level, just available income records, and they don't give you any tax deductions or anything like that. They just file your returns. So keep that in mind too. Like if you don't file a return, eventually they'll file one for you. Here's a good question. I think this is a question made in cheek. But if you use the bird in the background for content purposes, can you write off the purchase of the bird? Probably not, especially if those birds are pets. Especially if your girlfriend bought those birds as pets. Um, Still use your money, but even still, you're not supposed to write those things off because that's a personal expense. You know, they're pets, and they're not business pets. They're not flying around the office pecking at my employees. They're just pets, and unfortunately, you can't write off purchases like that. Usually not. What happens if you get caught writing off things that you shouldn't? Well, you'll probably get audited. And two things happens. One is you'll file a tax return and the IRS finds, certain your expense categories and certain expense amounts suspicious, so they'll audit you. They'll audit your tax return, and they'll require substantiation and purpose for these expenses and things like that. So that's one thing. Is what happens is like you get audited, and they discover that you're writing on things that you shouldn't, and then they'll assess tax on you. They'll disallow those expenses. They'll assess you with tax and penalties and interest. So it's not a good idea to write out things you shouldn't. Just follow the tax code, follow the law, and you've got nothing to worry about. Okay. All right. I think I have another question coming in right now. How do you form a partnership? Ooh, that's a good question. So a lot of people, I think, partnerships are kind of mysterious and elusive. Like when someone talks about a partnership, what does that even mean? And really, a partnership, all that is a multi-member LLC. It's when two or more people are registered as owners on an LLC. That's what a partnership is. So, and essentially, what you need with a partnership is you need a partnership agreement, and it's essentially just a document, behind the partnership that that allows you to kind of outline who owns what kind of money goes to who, and things like that. Ooh, this is an excellent question, and I've got time for one more question before I've got to hop. But the question is, can you donate to your own nonprofit? And the answer is yes. So board members and founders can donate to their own nonprofits, and oftentimes, claim the contributions as charitable contributions on their tax returns. Now, there's rules behind it. It's a good idea to talk to a tax attorney or something like that. But technically, yeah, you can donate to your own charity. And that is all the time I have left. I actually have to go speak to a prospective collective member, but I enjoyed it so much, like I do every week. And if you think the collective, might be a good fit for you, or you're interested in S corps or how it could benefit your business, then schedule a call with us. Feel free to go to our website and schedule a call with our business advisors, and we're excited to talk to you.